All right, what's going on, team? Happy Wednesday, November 5th, 2025. Can't believe how quickly this year is moving along, y'all. It is almost, I don't want to say almost over, but it is almost over. Now that we're almost halfway through the fourth quarter, one of the reasons I always like to have these live sessions, whether it's by myself or with one of my partners, is to have that conversation of kind of a look back on what the year so far has produced, what successes we've seen, what client wins we've been able to, of course, help our community with, and just talk a little bit about moving forward with, what does the rest of the year look like? And most importantly, I feel like the following upcoming 2026 potentially look like as we get closer to the year's end. So we're going to have that conversation today. We're going to do a deep dive into, a lot of, like I said, our past client wins and successes over this last 11 or 10 months, technically, because we're in November now. And it's going to be a good time. I'm going to also talk to you a little bit about some of the objections that we're fielding or some of the problem solving that we're going through with whether it's our first time home buyers, our relocation clients, our move up buyers, all of which are some of our favorite client types and archetypes to, manage and help win. So we're going to hang out for a little bit today. I'm going to try to do like 45 minutes to an hour with you guys. Every time I say that, it blows by, goes super fast, and we end up spending even more time together. So if you're here, please drop me a comment or message. Let me know you're here. I greatly appreciate you guys joining. If not, I'm going to be making this content and material regardless. And then, of course, going to, chop it up into some clips and reels for socials and to be able to continue to educate the community. So that actually brings me, I feel like, to my first topic. The very first thing that I wanted to talk about today is what exactly separates or differentiates somebody, business professional, business owner, salesperson, whatever, in the markets that they're in. Okay. So what separates somebody? With me personally, okay, this is something that I try to educate all of my real estate partners to, all of my colleagues on, and something that, actively right now, I'm actually training my first licensed MLO that we as a company have now hired. So super exciting. But I'm trying to educate her on the ability to be a subject matter expert. Okay. Subject matter expert, somebody that in the community based on evidence. Okay, so an evidence-based subject matter expert allows somebody to set themselves apart from another person, another same individual that's in that industry that does essentially the same job as them. We'll talk a little bit more about the same job here in just a bit. But what separates them? Okay, and when you're an expert at what you do now, obviously, it takes time to become an expert. Don't just call yourself an expert. Don't just throw that term out willy nilly, but you want to be able to educate yourself enough, okay, in the field that you're in, whether that's real estate, mortgage, insurance, solar, title, escrow, whatever the case may be, that the people that you're serving, okay, can rely on you to provide them the education, the communication, the transparency, the all of the things that are super important that when you're building a client or customer, okay, there's a lot of value being added to them other than just the exchange of goods. Okay. So again, for me, I feel like that's incredibly important. Being the subject matter expert. Okay. You want to be able to speak to, your depth of knowledge, okay, your breadth of knowledge of the industry and how you're going to help that person succeed. I did this in a couple different industries that I was in prior to, coming back to the mortgage and real estate industry about 10 years ago. Prior to that, I was actually in a private lending field for a couple years prior to that. And thereafter, I was actually working for Tesla with their Solar City division and, running a sales team on that side. So, of course, having to understand and become an expert in solar and renewable energy and all of the moving parts with that was a huge proponent to me having success in that field. Okay. Because again, as a sales professional, everyone tends to have a little bit of a different opinion on what exactly it means to be a salesperson. And when you're an expert salesperson, okay, what you are doing, okay, and what you're saying that you are is an expert communicator, an expert. problem solver, an industry expert specific to the field you're in. And those three things, I feel like when you're an expert communicator, problem solver, and industry expert, means that it's tough for you to be beat. Okay. When you're tough to beat, right, it allows you to relax a little bit more. Okay. When you're actually actively in the sale. Okay. When I'm in these conversations with my clients and having these deep dives into whether we're on that first call, we're having a discovery for their pre-approval process, the home buying process, the affordability process, all of the above, it removes my need to or desire to kind of jump on that customer and close the deal, right? That's because, again, I'm treating it as again, being the expert in my industry, treating it as a problem solving effort for that customer, right? That client. So I want to be delivering value at all times. Super important, right? I know it's obviously a big buzzword right now in the social media world and sales world is value, 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 value. We hear about value all of the time. But what are your value adds that you're bringing to your customer? You know what I mean? If it's just the exchange of goods, right? I get you in your house for the exchange of my commission check. Okay, fantastic. But how? What is your strategy? What's the game plan? Where's the evidence that you've done this time and time again? Do you have testimonials and reviews and things from past clients that can speak to the things that you're telling them you're going to do? What is give me a list of the wins that you have. What have you negotiated? What have you see where I'm going with this? It's a whole thing. You know what I mean? It's kind of like Play Doh. When you play with it, mesh it, and you build that right um, whatever it is that you're building, it's tough to argue with. You know what I mean? It's something that you can present to your client in confidence and remove yourself from what feels like a sale, right? When you're actually problem solving and bringing value. So, just my 2 cents on that. I don't know why we hopped into that so quickly, but it definitely triggered something with me as far as a reaction, an emotional reaction to something that obviously I'm extremely passionate about. But okay, so let's talk about the market. The market in November 2025 here in Las Vegas and Henderson. Now, again, o- I really like to focus on real estate local. As you guys know, all real estate is local. So there's parts of the country right now that are super different to the Southern Nevada, real estate community that we're currently in Las Vegas and Henderson. Okay, we've, the last few months, we've seen inventory continue to rise a bit. We've seen homebuyer activity continue to decline and actually increasing here recently with the recent dip and decrease in interest rates. We'll talk a little bit more about that here shortly. But, in general, the industry itself has started moving a bit slower. Now, what does that mean for a prospective home buyer or someone, moving and shaking in this current market? It means opportunity, guys. It means a lot of opportunity for our home buyers. Again, whether they're first time home buyers, whether they're move up buyers, relocation, whatever, there is presently a lot of opportunity in our current local market. So we'll talk more about those opportunities and what that might look like. But it's not the same in all other 49 states across the country. Okay. So all real estate is local and locally here in Las Vegas and Henderson here in Southern Nevada. Now, I also do business across the entire state of Nevada. So I do business in Reno and other areas in the northern part of the state as well. We've seen a lot of opportunity there as well, but just that market moves even slower because of, again, different population, different demand, things like that. So here in Southern Nevada, right, Las Vegas, Henderson, your surrounding areas, even Pahrump, what have you, we still have a lot of demand. Okay, we still have people moving here from all over the country for different reasons. A lot of Californians, obviously, with them being our next door neighbors, but there's a lot of opportunity locally here in the state of Nevada, right? We have no state tax. Things are a little bit more affordable here than they are in places like California. Our home prices are more affordable. You know, different things, different value propositions to people that are, either relocating here or becoming homeowners here. Now, in addition to that, something that I continue to speak to on different social media platforms, different podcasts that I do, whatever, as we educate the community is how I feel like insulated we are here in Las Vegas, right? I'm born and raised here. Okay. So I was born here in, the mid to late 80s. And back then we were like a sub 1 million person community. Obviously, that continued to grow through the 90s and early 2000s. Now, after the GFC, Great Financial Crisis in 2008, obviously the city itself slowed down quite a bit. But since then, okay, Las Vegas has, I feel like we're coming through a new, um, kind of revitalization of the city over this last 5 to 7 years where we now have professional sports teams here. We now have industries from all over the country and even the world moving here to set up shop, whether that be, some of the largest companies in the entire world like Amazon, or if that happens to be like emerging companies when it comes to, some of these other different tech giants or data centers, what have you. Las Vegas is in pretty high demand. So when you're talking about real estate, okay, one of the levers that greatly, manipulate that market is demand. So it's much different than in a city in the Midwest or the southern states that don't have that demand or they don't have people relocating to that state or wanting to be in that state um, regularly. It changes things for us when you talk about the dynamics of owning real estate. Okay. That's one of the things that with all of my clients, again, whether they're first time home buyers or they're buying their 15th home, I remind them on all of the dynamics of home ownership with home appreciation. What do we historically see with value increase? What does it look like as you're paying that, mortgage down and different opportunities become available to you? Like there is more than just that one sale. Okay. Which obviously that's incredibly important to strategize around and make sure that we get that absolutely right and you get the most opportunity possible. But it's more than just that one sale. Okay. So I want you guys to remember that buying a house isn't just a one and done thing. It could be, right? Obviously, if you're buying a house with a 30-year fixed rate, your principal and interest payment for the next 30 years will never change, much unlike your rent that you're currently paying. But it is a kind of living, breathing organism. Okay. Real estate with home values going up, appreciation, people moving, things, whatever. It goes in, cycles essentially, if you will. But I have essentially 10 questions here. So, okay, on my chat GPT on my other screen, I pulled up 10 questions. I wanted to, kind of field some of these questions as if, so what I had asked chat GPT. So I put in the voice of a first time homebuyer or active real estate shopper in the present market, can you please give me the top 10 questions or objections for someone shopping in the Las Vegas and Henderson real estate market? Remember, because we want to do local to our market in November 2025. So, like right now, presently, use references and sources from mortgagenewsdaily.com. Okay, so that's a website and tool that even me as an industry expert and someone that's been, obviously the owner of a mortgage company, I use Mortgage News Daily and I share that website with my clients for, keeping top of mind items when you're taking a look at real estate as well as like average interest rates across the country. So we'll take a look at Mortgage News Daily here shortly. So use references and sources from Mortgage News Daily and CNBC for data. Okay. So that's essentially the prompt that I used to put together what these 10 questions essentially that we'll go through together, whether we go through them like kind of deep dive, talk a little bit about them in detail, or we kind of, skip past if there's some repeats here. But I think this will be super powerful for us to have a discussion on. Also, hold on real quick. I don't know why let me remove this scene real quick. Boom. Okay, there we go. Okay, let's go through the very first question. So, this is a fun, hot topic and hot question that I get all of the time, obviously. And we have to be really, really on top of this and understanding how both the real estate market and the interest rate market are moving. Okay. So you want to make sure that you're working with, again, subject matter industry expert that follows this stuff super closely that can educate and strategize alongside you appropriately. I also have a story for this actually here shortly for a client of mine that's actively in escrow right now. So super important, but we'll talk about that after I answer this first question. So, are mortgage rates going to come down any further? And should I wait? This is a phenomenal question, guys, and it's literally something that I get asked on a daily. Okay. So, and remember, you guys have to remember now, this is not the first, you know what I mean? This isn't months of, 6 months of, or the first year that we've been in this higher rate environment. This is now 3 years. Okay. 3 years since that post COVID, dreamland that we were in 2020 and 21 with 2 and 3% interest rates, where in 2022, we saw rates double. Okay. We went from a 3% rate environment to a 6% rate environment, and they just continued to increase from there. Okay. If I remember correctly, I want to say July of 2024, I believe. It was either July 2023 or 2024. But that was the highest peak rates that we've seen on conventional interest rates. Now, one of the things that I hate more than anything when people talk about interest rates is they don't specify what rates they're talking about. Okay. Most of the time, when people are talking about rates, they're talking about conventional interest rates, but it's really important that you specify because there is a difference between conventional rates, government insured programs like FHA, VA, and USDA, and then obviously you have other investment type of portfolio loans that have different rates as well. But it's always nice to specify, okay, conventional rates, right? In July of that year had increased to 8%, right? Kind of across that board. Some lenders, some higher, some lenders like myself, a little bit lower, but kind of in that 8% range, which is insane, guys. Like they were getting out of hand for sure. Now, obviously, a lot of that has to do with things like inflation getting out of hand. Okay. So inflation had continued to surge all the way through that post pandemic kind of like la la land that we were in. It was really crazy. And of course, obviously, the Federal Reserve continued to kind of increase what would be the short term Fed funds rate, which remember, hopefully, you guys all know the Federal Reserve. The short term Fed funds rate does not directly correlate to mortgage interest rates. Okay. So, as they raise the Fed funds rate over the last few years, right, we went from a basically non existent Fed funds rate to a 4 or 5% Fed funds rate, right? That increase didn't directly affect mortgage interest rates. However, things like inflation spiking and all of that other stuff did. Okay. Now we're seeing the same thing now. So the short term Fed funds rate now, we've had now two consecutive 25 basis point cuts coming from the Federal Reserve. There was one this last month and the month prior. Okay. Now, with the short term Fed funds rate cuts, 25 basis points each time, did we see mortgage interest rates decrease by 25 basis points each time? No, we didn't. Okay. We actually saw them increase and tick up just slightly after the Fed announcement. We'll talk about that a little bit more in detail later. But I say all of this to hmm, I wanted to kind of give you background for a lot of this stuff and how we answer this question. Are mortgage rates going to come down any further? Should I wait? The perfect answer to that and what should be, how it should be answered by an industry expert is we truly do not know. Okay. Because again, we really do not have a crystal ball or know in our industry. And our industry is one of those where you would hate to make a statement and something like that, a definitive statement, because it could flip on you so fast, so quickly. I tell all of my clients all the time mortgage interest rates will deteriorate significantly faster than they'll ever improve. Okay. They'll improve over time consistently, very slowly, and it feels great. But they will get real bad real quickly, and it happens like that. Okay. So that should be the first way that somebody answers that question for you. We really don't know, but based on forward looking guidance. Okay. That's super important, guys. Forward looking guidance. And that comes from things like the jobs report data, the Federal Reserve SEP meetings, dot plots, whatever. Okay. We have a trajectory based on inflation coming down and where it's presently at, and where the Federal Reserve and whatever trying to take the economy, that mortgage interest rates should continue to cool down. Okay. So, what does that mean? Continuing to cool down does not mean that unless we see some absolutely catastrophic global disaster, pandemic, war, whatever, that we're going to be in this higher rate environment for a bit longer. Okay. And when we're talking about interest rates presently for conventional rates, and you can go to, let me real quick see if I can share my screen a little bit. Hold on a second. Let me share screen here. Boom. There we go. So presently on mortgagenewsdaily.com, okay, we have 30-year fixed rates. And again, this is an average across all 50 states with the top 500 lenders, whatever. One of the reasons I use mortgagenewsdaily.com because it's specific to their data and research. You'll see conventional interest rates kind of in that low-ish 6% range, 6.37% as of today, right this very second, for 30-year fixed rates across kind of industry average. Now, what are we expecting them to look like in the coming 6 months, 1 year, 2 year, et cetera? Now, again, none of us actually know, but we're hoping that, rates continue, conventional rates, all rates continue to cool down. And on your conventional rate, you'll see something from like the low six start pushing into the high fives to like maybe the mid fives within the next year or two. So, very good, right? That's the trajectory that we're on. That's where we're heading. But is it guaranteed? No. When will it happen? Nobody really knows. It's a matter of trajectory. You'll see right here, based on this like little chart here, the areas that we've been in over the different time plots. Right? We've now since the let me pull it right here. Since December of last year, 2024, your 30-year fixed rate on a conventional loan was 7.08 as far as industry average across all 50 states with 500 top lenders. And again, they're now kind of in that range of 6.37. So they've been cooling down. Sometimes they go up, sometimes they come down. So, for me to answer this question as your local mortgage partner, expert, whatever, are mortgage rates going to come down any further? Should I wait? They should come down. Yes, absolutely. But should you wait? Okay, this is the part of the question that needs to be focused on and really kind of I want to dig deep on that exact piece because what I need to know with you as a first time home buyer, someone relocating, or someone a move up buyer of some kind, what is your urgency or what exactly is your plan currently? Okay. It's something that, again, I have a real deep discussion with all of my clients on when I'm trying to identify what the pain points are, what the timelines look like, and what is the problem that we're solving. Okay. So here are my thoughts. For anyone presently, okay, if you are in a lease, if you're in a rental lease that is expiring sometime in the next 3 months, 6 months, etc., okay, you have a fantastic opportunity to prepare yourself for homeownership. Now, that's not to say that you are ready, but it is a great time. If you have 3 or 6 months before your lease ends, that is a fantastic opportunity for you to partner with a local, mortgage expert and real estate expert in your community to be able to start building a plan for, okay, what does homeownership look like for me? This is what I'm presently paying on my lease. This is how long I've been paying it. This is how many rent increases I've seen. And this has been my experience with renting whatever. Okay, I want to know those things. Those things are super duper important. Then what do my finances look like? Okay. This is what I do for work. Am I a W-2 employee or a self-employed individual? Do I need more time or strategy to be able to prepare myself to income qualify? Then what does my credit look like? Okay. Not enough people, and this is not just one specific type of buyer, this is all buyers. I feel like not enough people understand all of the nuance to how credit works. Okay. That's another thing that I like to help with and kind of educate a bit on more from a personal level than a professional level. It's something that I've heavily invested a lot of time into, not just for my clients, whatever, but for myself. Understanding credit. How does it work? What are the super important things to keep top of mind when you're paying off, paying down, opening new credit, closing accounts, whatever? Because your credit scores when you're qualifying for a mortgage, especially depending on the specific mortgages that you're qualifying for, they heavily influence the interest rates that you're being quoted and the closing costs attached. Okay. So I much prefer to help my clients strengthen and become the strongest buyer possible. Now, that doesn't necessarily mean that we have to get you to a 740 or 780 FICO score to become a homeowner, obviously. Myth busted. Don't wait for that. That's not smart, okay? Because you're going to be missing a lot of other opportunity in that time frame that it may take you to get to that destination, okay? But it is important that we try to get you from, if you're talking about the 500s or low 600s, that we get somebody, you know, credit in a position to be able to qualify easily. Okay. Now, again, that means score. That means ideally we're cleaning up any derogatory items on the credit if possible. That means hopefully maybe we don't have any late payments within the last 12 months for any active accounts. Real itty bitty little important things that make a world of difference when you're trying to qualify to buy a home. Now, I feel like just too many people that do what I do for a living will just take a look at an application, take a look at the income, employment, assets, credit, whatever. Hopefully, that's important. Obviously, hopefully they're doing that. But they'll just blow by it, tell you yes or no. It is what it is. Take it or leave it, and be done. Okay. One of the ways that I set myself apart with my clients, with my partners, with my community is I'm going to take the time with each and every single one of you to not only make you a homeowner and achieve your goal, but I'm going to do so as financially beneficial to you as possible with the best game plan to get you into that house. And once you're in that house, what does the next 6 months, 12 months, 5 years look like for you as a homeowner? Okay. Because if you were here from the beginning, when we were talking about how your house, your real estate, once you're a homeowner, it's kind of like a living, breathing organism, right? That's because, again, you're doing a few different things all at once when you're in that house, and you're really going to probably be doing them unconsciously, right? Just like you pay your monthly rent. Hopefully, you're paying your monthly rent on time every month. You don't really think about it. It's either auto drafted or whatever. Easy peasy. Unfortunately, that money is just going out the window to your landlord and paying their mortgage, but you just do it unconsciously. Now, when you become a homeowner, hopefully you're doing the exact same thing. You're unconsciously making your mortgage payment each and every single month. You set it on auto pay, set it and forget it, call it a day. As you're making that monthly mortgage payment, a portion of that payment is going towards your principal, which is fantastic. It's lowering the loan amount that you're borrowing. It's increasing the equity position. Now, in addition to that, you're also getting what's called appreciation in that property. Okay. As home values in the surrounding area of your community, whatever, they're selling for more, then that means you have an increased equity position in your house. Now, it's not going to be the same each and every single year. Some years will be more than others, but over time and historically averaged, right? We generally see here in Las Vegas about a 5% appreciation rate year over year for the last whatever it is, 50 plus years. So you have that. Okay. So the opportunity cost for not becoming a homeowner right now needs to be discussed and calculated from the very beginning. Okay. I need you to understand what the opportunity cost would be if you don't buy a house in, okay, let's just say this present market, right? Where we have the ability to negotiate all of your closing costs to be paid for by the seller, to negotiate your home repairs to either be repaired or compensated via additional seller credit, favorable due diligence periods, rate buy down. Like there is so much opportunity right now in the present market that you otherwise in other markets did not have. Like me myself, when I bought my house in 2021, as you guys already know, it was 2 or 3% rate market. Yay, fantastic. But in every single house that I went to look, me and my wife, okay, with me as the owner of my mortgage company, there was about 10 to 15 offers on each and every single house within 48 hours. Not only did we have to compete with all of those offers, but there was no negotiation on price. There was no negotiation on seller credit. There were definitely not any buyer repairs or requests. When I bought my house, luckily, and again, I say this luckily because this particular house was a take it or leave it sale. It was listed at a certain price. They were not going to be entertaining any credits or any repairs, and there was no negotiation on that price. It was a take it or leave it. It was a house that was purchased by Zillow, and they tried to flip it, and they took an L. So yay for us. But I was going into that situation with absolutely no leverage. Okay, you as the prospective home buyer, move up buyer, relocation buyer coming here to Las Vegas, Southern Nevada, have those opportunities. So we have to discuss, what are the opportunity costs? Okay. What does it mean if you need to, for some reason up here, wait until rates come down 0.5% or 1%? Or how can we get you that rate that's already 0.5% or 1% lower? But I need to have these conversations with you and educate you specific to the market, specific to your qualifying situation, and what exactly can we help you deploy. Okay. I work with some of the best realtor partners here in our community, some of the best negotiators, communicators, and people that will go to bat for you, much like myself. So I don't want you to sacrifice what those opportunity costs might look like. Super important. So right now, our mortgage rate is going to come down any further. Should I wait? Are they going to come down? I'm pretty positive. Okay. Should you wait? In my personal opinion and professional opinion, I would say heck no. Okay. The last conversation around that is understanding. Okay. Most people, I talk to homeowners all the time that have purchased a home, maybe even two homes. They don't even know what a mortgage refinance is, how much one might cost, and what they'll need to do to achieve one. Okay. Crazy. You need to be able to understand, again, once you are a homeowner in that house, what essentially does that, like I said earlier, that next 6 months, 12 months, or even 5 years look like for you? Okay. What does a mortgage refinance do for you when you buy a house at a 6.5% rate and interest rates are now 6% or 5.5% or whatever the number, arbitrary number is that you want to come up with? How do you refinance? What is a refinance? What will it cost me? And eventually, what will it save me? Okay. Because again, when you are that homeowner, you'll have these opportunities that are presented to you. The people, the ones that truly won during 2020 and 21, when rates hit 2 and 3%, they were not the home buyers. Okay. I already told you my experience with my home purchase and how miserable it was. Yes, I was able to purchase my home with a 3.5% interest rate. That's fantastic. But I didn't get anything else. I didn't have any other opportunities presented to me. I didn't get to save any amount of money out of pocket. I had to pay for my 5% down payment. I had to pay for all of my closing costs. I did not get any appliances in my house when I purchased it. I had to purchase my washer, my dryer, my refrigerator. All of the things that normally would come with a house were not in the house that I purchased. Missed all of that opportunity cost. But yes, fantastic. I have a 3%, 3.5% interest rate. Now, who really won during that time? It was the already existing homeowners, right? The people that already owned a home, the people that have been sitting in their house since 2019 or 2010 or 2000, whatever. They were the ones that were able to refinance from their 5, 4.5, whatever percent rate down to 2, 2.5, or 3% in a matter of 14 days. Easy peasy, real fast, real quick, right? That's what a mortgage refinance does. And those are the ones that get to take advantage of rates as they come down. So I'll leave that question with, what exactly is your current situation? That's the most important thing for us to understand. What's the urgency? What are the pain points? What are you looking to accomplish? Are you in a position in life where it's time to become a homeowner? Or are you thinking about moving to another state next year or relocating for work in 2 years? Or, in a lot of those scenarios, even me as the owner of a mortgage company, I might not advise buying a house as the best decision in a state or place or whatever life circumstance that you don't plan on being in for the next 3 to 5 years. So one thing with me is you can always have faith that I'm going to be fully transparent with you. I'm going to be fully transparent. I'm going to educate you and I'm going to speak to you not just as an industry expert, but I'm going to give you personal examples and stories of not just myself, but past clients. Okay. We want to help you win. If you winning means you not buying a house right now this year because you have other plans otherwise in the next, 12 or 24 months, that's winning, right? Because you didn't waste your time, your money, and have a, bad taste in your mouth when someone tried to get you to buy a house and still go through that process when they already knew you weren't going to be in that home next year. And now you probably will stop yourself from buying the next house, or you're going to have, go on Reddit and talk about real estate, whatever. You understand what I'm saying? So very, very important to, make sure you're working with industry experts that have your back. So educate you properly. All right. Next question. This is, we're getting through these actually quite slowly, so I don't know. I don't know if we're going to get through all 10, but we're going to try. Is this market still too expensive for me? For a lot of people, absolutely. Like straight up, 100%. Is this market still too expensive for me? Probably. If that's, you know what I mean? Like there's a lot of cases where the for many people, especially here in Southern Nevada, where our area median income here presently, I believe, in Clark County is about 112,000 at a 100% area median income. Okay, that's for total household income. So if you have one person, you have two people, you have three people, whatever. Area median income, household income, I believe, is presently 112,000. Okay, if you have $8,500 a month in total gross income or whatever that dollar amount exactly comes out to, and you're trying to purchase a five or $600,000 house, and your total monthly mortgage is going to be somewhere between $3,500 and $4,500, you can see where this gets expensive quickly. Okay. Now, two things you need to do when you're trying to buy real estate. You need to understand your personal affordability. Okay. Not just what can I qualify for, but what is my actual affordability? What am I comfortable affording? Just because in the mortgage world we qualify you prior to taxes, so we use gross income to qualify you. And sometimes I see clients that want to push it all the way up to the tippy top max of what their debt to income ratio can allow them to buy. But does that work for your financial situation? Are you comfortable spending those dollars? Do you understand what that total monthly payment means for your household finances? When you're talking about becoming a homeowner, okay, you got to remember you have principal and interest, obviously. You have property taxes, okay? You have homeowners insurance. If you're putting down less than 20%, whether that's an FHA or a conventional loan, now you won't have it on a VA loan, which is why they're so powerful. But anytime you're putting down less than 20%, you're going to have PMI. Now, you may also have an HOA. You're also going to have possible repairs in the house, possible things that come up. You're going to have your gas, your water, your electricity, your sewer, your trash. Like there's things, okay? And you need to be prepared for those, have the conversations around those, and make sure that when you're buying that house, you have a game plan to deploy. Okay. So affordability is super duper important. Now, we also need to have a conversation with, again, where is the market going? Okay. I know that, trust me, this is especially on the internet, probably the hottest topic that people just cannot stop talking about, that I've been hearing about since I came back into the mortgage industry in 2016. The fabled market crash. When is the market crashing? Oh, the market's definitely going to be crashing. The home values are definitely going to be going down. But guys, home values have increased so much so fast over this last, let's just say, since COVID, 5 years, whatever, that it's nearly priced out, more than, I would say, probably more than half of what would be our first time home buyers. Okay. So is there a market crash coming? Probably not. Again, unless we see an insane, and again, we just had one. We just had a global pandemic. We just had what would have been your opportunity for a real estate market crash just this last 4 or 5 years. Didn't happen then. Actually, the inverse happened because of where rates went. Rates go down to 2 or 3%. People have an ability to qualify. Home values are super up. Prices continue to increase. So, is the market too expensive for you? Possibly. It possibly is. Can we come up with a game plan strategy or whatever for you to still become a homeowner and make sure that you can afford the payment? Absolutely. Is it going to get any more affordable in the coming years? Highly doubtful. Okay. Will rates come down and improve affordability? Yes, for sure. Will home prices come down and improve affordability? Probably not. I wouldn't count on it. Okay. And one of the reasons I say that, again, it's not to spur urgency to convert that person into a paycheck. Don't care. Like, that's not what I'm here for. Obviously, I'm here to educate and I'm here to make your dream a reality when that time is right. But I need you to understand how important that time in the market is versus trying to time the market. Okay. I don't think that there's ever been anyone, like ever, that has been able to successfully time the market. Except maybe the guy that timed the Big Short because of the data and all of that stuff with the last, GFC, Great Financial Crisis. Very, 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 very few people in this world are able to time the market. But many of us, okay, many people, hundreds of thousands, millions of people bear the fruits of things like real estate appreciation, blah, 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 when you spend time in the market. Okay. I'm a homeowner, not because I timed the market perfectly to become one, but because I'm at a stage in my life that allowed me to become a homeowner, purchase a home. I'm here, don't have to rent. It's fantastic. Don't have anyone telling me what to do, make my mortgage payment, and spending time in the market, my home value has increased. I've made my monthly mortgage payment each and every single month to bring my principal down. Now my equity position is greater. Now my net worth has grown. Now I get to remove my PMI because I have a greater equity. You see what I'm saying, guys? So try to spend time in the market versus trying to time the market. Okay. When it comes to things like the stock market, I think the average American person is an absolute wizard and savant at selling their stocks. Okay. At the absolute worst time. Okay. I feel like there's data to support that if you guys want to, try to Google that, whatever. The average American is phenomenal at selling at the worst time, the very, very tippy top bottom of what a stock value is. And we're absolute legends at buying at the top, right? We're always buying it at the most expensive. Once we hear it from a friend of a friend of a friend that this stock and that thing and Bitcoin and whatever, we buy it at the tippy top. Okay. Why don't we buy it just when it makes sense, when we can afford it and spend time in the market? But okay, that was fun. That's my take on that. So, is the market still too expensive for me? Probably. Is there solutions to be had? Can we strategize around it? Absolutely. Is it going to get more expensive? Highly likely, guys. Highly likely. Okay, so I think we have time for maybe two more questions. And then I wanted to, do a couple screen shares here real quick. If you guys are here, I'm more than happy to answer some questions for you guys if you guys have any questions. But let's continue. So, let me find a good one here. How's the local supply inventory looking? Do I have room to negotiate? Oof, this is one of my favorites right here, guys. This is something that I feel like this present market is bringing to you, the prospective homebuyer, much differently than it's ever brought it, at least in the past 10 years, at least since I've been back in the mortgage industry, where I have had, currently, presently, year to date, right now, this is November 5th, 2025. We have exactly 62 funded loans, okay, with my mortgage company. And of those clients, I would say a very large number of them all negotiated a large portion of their closing costs to be paid by the seller, if not all. Okay. I'm not talking about just their regular closing costs. Okay. Because remember, guys, when you're buying a house, obviously you're going to have closing costs associated to it. Some of those closing costs will be dependent on the lender, bank, whatever that you're using, if they're charging origination fees, if they're charging processing, underwriting fees, discount points, whatever. Okay. But you're always going to have things like title and escrow fees. You might have transfer tax. Luckily, here in the state of Nevada, it's pretty customary for the seller to pay for the transfer tax on the purchase of a home, which is generally about 0.5% of the total sales price. So it can add up really quickly, but luckily that's normally paid by the seller. You're going to have things like paying for prepaids on your homeowner's insurance, paying on prepaids on property taxes, paying an escrow account and establishing an escrow account for your taxes and insurance, any HOA items, any home warranty, any real estate commissions. The list goes on and on, guys. I'm just talking about regular closing costs. Now, if your lender, if your mortgage partner, if your real estate partner is not negotiating those things to be paid for you in this market right now, you're missing out on a humongous opportunity. Okay. There are plenty of homes listed right now that would love to, pay for your closing costs in exchange for you buying their house. That's kind of how the name of the game works right now. So there's a lot of opportunity. There's a lot of low hanging fruit for a well qualified buyer. Okay, that can perform, that can get to closing, that can close fast, that has the right teammates, right? The right real estate partner and mortgage partner to get them to the closing table fast and get their closing costs paid for. Let's talk about getting you a either temporary or permanent rate buy down. Let's talk about prepaying your HOAs for you. Let's talk about getting you a home warranty. The list goes on and on, guys. So right now, okay, where inventory has, kind of increased a bit this last 6 months or so in our present market, and there's more sellers looking to sell, and they're, proactively selling. They're trying to negotiate to, they're not just putting it on the market for no reason. That's a very, very, big leverage tool for our home buyers. So make sure you're working with a partner that, obviously helps you take advantage of those opportunities. But yeah, local supply has increased. So that, of course, introduces those buyer opportunities and leverage points to our clients. So another reason why, again, time in the market versus timing the market. Okay. Get in there, get it done, become a homeowner, live happily ever after. Um, oh, this is a really, really big one, obviously. And then this one is specific to, kind of what I do for a living with, the owner of a mortgage company and a senior mortgage advisor is what about my budget? How much home can I really afford with these rates? So I feel like this kind of circles back a little bit to the affordability talk that we were talking about earlier. But one of the things that we're going to do on our very first call together. Okay. Now, with all of my clients, whether if it's a referral client, a sphere of influence, or a personal friend of mine, if it's a lead that I'm generating from an open house, regardless of where the lead or referral came from, on the very first interaction we're going to have, okay, we're going to either hop on a Zoom call together. Okay. We're going to hop on a Zoom call. That way I can screen share. That way we can deep dive, or we're going to meet together in person. Why is that so important? So to me, it's incredibly important for you to understand not just who you're working with and how committed they are to your success, but I want to be able to sit across from you and go through in detail all of the super important pieces of the puzzle with you. Okay? So we're going to talk about income, employment, assets, and credit. So your credit and debt, right? And inside of that, after we have the items that we need to review, we have the kind of deep dive into what that all looks like. We're going to go super detailed. We're going to go deep dive into affordability and strategy. Not just what can you presently afford, but maybe with different strategies deployed, what does that look like? How much more home can you afford? Do you want to afford that much home? What fits your budget? Where are you at in the next, 2, 3, 4 years, right? All of the things that I mentioned previously in the other topics is where we are going to, we're going to have those conversations in that first initial deep dive, right? That first discovery Zoom call, that first in person meeting. You're going to go all in. And by the end of that first interaction, you're going to leave either my office or my Zoom room in absolute confidence, understanding not just what your strategy is, your affordability is, your game plan is, your timeline looks like, on and on and on, guys. So, yeah, your budget's incredibly important. Budget becomes a little bit easier as rates come down a bit. But remember, guys, home prices aren't following. Okay. So as home prices increase, waiting for that home just because of where rates are going is going to mean you're likely spend an equal to or possibly greater amount of money if that home price increases, drastically. So, um, yeah, I would make sure your mortgage partner, even your realtor, make sure your realtor is, partnering with and referring you to a trusted mortgage expert that's doing these exercises with you, that has your back, that understands the power in you having this knowledge in here as well. Okay. It's not just me doing everything and then you get to the house with the keys and then you have no idea what just happened. Okay. We're going to do this together. I'm going to educate you every step of the way. I'm going to empower you as a home buyer and future home owner. And we're going to make sure that your finances, your household finances, are going to be rock solid moving forward and you're set up for success. So, okay, super fun. Those are some questions that I was able to pull from, like I said, ChatGPT based on that prompt on what are like some of the top questions that we're getting and, whatever from all of the clients right now. So there's that. Let's talk a little bit more about, I guess, rates here just before we go. So again, you have on mortgagenewsdaily.com, these are, and just real quick, I wanted to bring this up. If you go on mortgagenewsdaily.com again, which I highly suggest that this is a very, very good just kind of barometer for what do rates look like across the country. Now, again, remember what I'm about to show you is how this relates to your exact situation. Okay. One of the reasons you don't want to just have a conversation about rates or just get a pre qualification is because it's not going to matter to your exact scenario. Okay. With my clients, we're going to put together that exact scenario based on their qualifying FICO score, their down payment, their program that they're leveraging, whether that's conventional, FHA, VA, UIT, whatever. It's going to be specific to them. Okay. Because when you see these rates, you might then think that, hey, these rates are going to be the rates that I see when I go to apply for my mortgage, right? You might be using a mortgage calculator. You might already be punching the numbers in. You might already be thinking that you're either priced out or priced into the market, whatever. But if you click right here where it says more rates data, you're also, or excuse me, learn about our survey, you're also going to see right here, this is telling you what industry averages, again, across those, where does it say? Mm-mm-mm. Okay, right here. And then it says this is for a top tier scenario, is used as a baseline. Okay, so top tier client, meaning they have a 780 FICO score and they're putting 25% down. Okay, that's why some of the time these rates and numbers can be, skewed clearly because they're qualifying based off of a 780 FICO score and a 25% down payment, which again, on an FHA loan, you're talking about a client having a 3.5% down payment. So it's drastically different. On your VA client, right? Most of the time, they're not putting a down payment down because they have zero down eligibility because they're a service member, whether active duty or disconnected service. So you just also have to know and kind of like how to comb through the data that you're looking at or how to actually get to that answer that you're looking for. And most of the time, I would say 95% of the time, that's going to come from the partners that you're working with, your realtor, right? The questions you have specific to real estate, make sure you lean on and leverage your realtor. Make sure they're a subject matter expert. Make sure they're able to communicate with you. Make sure that they know the answers to communicate it back to you. And then, of course, with your mortgage partner, your mortgage lender, mortgage broker, et cetera, you're going to want to make sure that you are qualifying and you are being given the education specific to your qualifying scenario based on your qualifying scenario. Okay. Not a prequal, not a conversation about rates only. You want to do that deep dive and understanding what you're pre approved for, the hows, the whys, the whats, the strategies, all of the above. All right, guys, that was 60 minutes with me, about an hour that we spent on here talking a little bit about the current market, some top of mind items with first time home buyers, relocation clients, or people buying in this market right now, and of course, where the market might be heading. So, it's been a crazy year, y'all. 2025 has been one of our most successful years to date, at least mine personally, with my experience in the industry for over 10 years. So it's been fantastic. You'd think it wouldn't be that way given the market climate dynamic, but we continue to show up. Okay, guys, that's one thing with my clients I will never stop doing. I will always show up for them I'll continue to push. We'll continue to win. We'll continue to fight to make sure that you're achieving your dream and goal of home ownership, whether that means becoming a homeowner or achieving more affordable home ownership through refinancing. You're paying off debt, all of the things, all of the magic that we can make happen as a mortgage broker, a community partner, and somebody that you can believe has your back. Okay, guys, remember, teamwork makes the dream work, and who you partner with matters.